Hi, good morning. We'll just wait for a minute or two and then we will start. No worries. Okay, let's start. If somebody joins, all good. So quick introductions. You can also give a thumbs up. Do you see my screen? Okay, perfect. I'm just going to stop sharing for 1 second and start again. Hi, Marika, welcome. Okay, we are starting now. So welcome, guys. My name is Jasmine. I'm the founder of FAMIGOS, and what we do at FAMIGOS is provide financial advisory services to expats in Germany. Yeah, so that's um, what we work at. Let me just quickly get the screen started. Perfect. Yeah. So again, quick word about Famigos. So we work with families and individuals who are currently residents in Germany and with regards to their broader financial planning services, right? So we deal with anything from simple banking to helping them set up investment portfolios, insurances, helping them buy real estate, and of course the long-term retirement planning as well. Now, this session particularly is, I guess, most useful for the people who are either planning to shift to Germany or who have recently moved to Germany. However, in my experience, even if when somebody is here for 3 years, 4 years, sometimes they are still not fully well versed with how certain things work here in terms of, whether it's investments, tax perspectives, retirement, and other financial products. So even if you have been here for a few years, I mean in Germany, so I still believe that you will take something out of this session today. Let's start with the agenda. We'll talk about first. Now, this is more from the perspective of recent, let's say, newcomers in Germany. Like, what can you expect in terms of cost savings? We'll talk a little bit about banking as well. Then, of course, if you are employed here, then the German social security system has a significant impact on your salary statement, and of course, your all your monthly financials. So we'll try to understand that a little bit. And also from a risk management perspective, right? So he will talk about a diverse range of topics from, simple things like, okay, when you get a new an apartment or you start renting a house, what are the risks that you are exposed to and how you can kind of safeguard, to the long-term risk planning, yeah? So we'll talk about different perspectives. There's one thing which I want to add here on this topic of risk management. Germany is um, a different kind of country when it comes from risk management perspective. Probably there are few countries in the world who have the same kind of, let's say, level of insurances that we have here. And for some, it could be excessive, but we take an approach that we should definitely have the most crucial ones. And then the ones which are not so crucial, that is more up to your own personal kind of preferences and also your financial ability to take those risks. Yeah, so that's my take on how we look at insurances in Germany. So let's start. Um, simple stuff, right? Somebody who's new or who's kind of about to come to Germany is like, okay, the first thing you always need is the bank, right? Now, like any other country, we have two broad kinds of structures here. One are the brick and the mortar ones, the big ones or the small ones like Deutsche Bank, Postbank, your different Sparkasse as well, Commerce Bank, yeah. So that's one side, and then you have these new kind of online versions of banks. Most, let's say, common, Comdirect, Revolut, N26 Bank, yeah. So our perspective on what could be, let's say, sufficient and good from a short-term perspective and a long-term perspective, I think we kind of narrow down on two, which is Deutsche Bank and N26, right? And why we would kind of recommend these banks. Number one, both are pretty easy to kind of open. N26, of course, is, being an online bank, it has a simpler process of kind of signing up and all that stuff. Deutsche Bank is slightly complicated, where you really have to kind of, fill up an application. Not everything can work online. But we have a very strong cooperation with Deutsche Banks, and most of our customers, it's just like a click away, an online signature, and that works. And from our experience of working with different, let's say, brick and mortar banks, which only we legally can work with, um, I think from all kinds of services, and this is where the next point is, whether it's about simple banking, whether it's about investment depots, or it's your fixed deposits or saving accounts, and even international transactions, I believe Deutsche Bank is a pretty good one to work with. N26 is also good on a lot of these fronts, except when it comes to cross-border financial transactions. If you are doing any transactions outside of EU, then N26 cannot help you there, right? So that's the problem. But I think generally my experience, because I have worked in different parts of the world, of course, I come from India, so I worked in India, I worked in States, I worked in London. The whole banking structure here in Germany, especially the traditional one, is slightly conservative. They still will charge a significant amount of fees if you were to do large cross-border transactions, like even Deutsche Bank would charge a fixed fee and then plus a percentage of the amount that you are transferring. So my suggestion to you would be, in case you're doing a large financial transaction from outside of EU, or even sometimes within EU to Germany, then using Revolut and Wise would be much better. They give a much better currency exchange rates, and also the fees of the transfer on the amount is very, very favorable as compared to these traditional banks. Yeah. So I would consider Revolut and Wise only for bigger cross-border transactions, but purely if you were to consider banking in EU, Deutsche Bank and N26 kind of work very well. Customer care, of course, most of the expats prefer customer care in English. Deutsche Bank has an English hotline, so that's not a problem. And they recently came up with a very nice new online banking interface. So the new app is amazing. It's much better than the other ones that we have here, even N26. The only problem with N26 in terms of customer care is there is no person who you can kind of pick up and call. That is only assigned to you if you have, I think, assets over a certain level. Only then you get assigned a person to talk to. While Deutsche Bank, you could always pick up a call. Fees, yeah, that is important. We already talked about in terms of large transactions, but let's say in case of investments, right? So through both the banks, you can do investment depots, and that's true for all the banks. More or less, the fees are quite comparable. If you were to look within the brick and the mortar kind of banks, they usually charge a basic depot fee, which is like an annual charge. While N26 and other online banks, they could charge a percentage fee based on the transactions that you do, or they could also charge a fixed fee. But at least the ones that here we are talking about, they are both pretty kind of great in terms of fees, especially for our clients who we do investment depots, let's say in Deutsche Bank, we have only a 36 euros a year kind of fee. And there is no fee related to the savings bank account for 2 years at least, and you get your debit cards and all that. So 36 euros a year is great. When you're doing a lot of investments and there is no buying fee, there's no selling fee. So it works out pretty well. So that's quickly about banking. Let's focus on cost of living, right? Um, what we have here is an estimate of what an average monthly cost could look like for three different profiles. Let's say one a single person, second is a partner, third is a family, right? And we took Berlin as an example. Let's say for a single person, right? Approximately the cost could be anywhere between 1,600 to 1,800 euros a month, while a partner situation, you could have anything approximately from 3,000 to 3,500. Again, depends upon, what kind of lifestyle you lead. And with a family of two kids, it could easily go up to 6,000 euros a month, right? What we have tried to do is kind of divide the cost structures into three parts. That's how we always kind of look at monthly budgeting. Fixed costs. Fixed costs are your basic utilities, your rentals, where you cannot kind of, change much on a monthly or even on a long-term basis. Yeah. It includes your phone, internet, which you really need these days. So you kind of consider them as fixed costs. Variable costs are basically your consumption. Yeah. Your grocery, your entertainment, your shopping, your clothing, your transportation, everything is included here in the consumption. And of course, the last, but not the least important is what we have added are the insurances. So it's kind of like usually a small percentage of your monthly expenses. But the ones that we have definitely included here is, the liability insurance, household, accidental, legal. So these have already been included and gives you an idea of how much you could end up spending here. Now, for insurances, we have actually kind of overestimated a bit. Yeah. So typically, if you look at, the whole structure, how it keeps moving, as the family grows, right, your fixed costs percentage share decreases while your consumption increase. The same kind of trend that you see in the insurance cost as well, that it kind of goes down. Yeah. So this is typically what you can expect if you're living in, let's say, Berlin. And here we have looked at somewhere like, the main areas of Berlin, not really, the far off villages. So you're probably looking at a kind of a higher estimates here. Yeah. I would highly recommend you guys to, if you want to get a good sense about your current situation, that how much you are spending, and then compare it to at least our model. We have a tool on our website. So my website is myfamigos.com, and the moment you click on it, you get an option to use this tool where you can choose, okay, how many people are there in the household, which city you're living in. You're living inside the city, outside the city, do you have pets, do you have cars? Once you give answer to these 5-6 questions, it'll give you a cost of living estimate. So it's a kind of good check which you can do yourself, whether where do you stand vis-a-vis how at least we as financial advisors think that approximately you should be spending. Now, costs are important, right? Because it has a direct impact of how much we are saving. So the simple equation is you have a certain amount of money flowing in, and then you are spending, which is your total cost structures, and whatever is left is typically your savings. Now we work across a huge range, when it comes to an age range of our clients. My average kind of a client age would be approximately, I think, around between 30 and 40 years. So that's the people who I most work with. But my youngest client is like 10 years old, and my oldest client is 70. Yeah. So when you're working with different kinds of these family structures, or individuals to probably people who already retired, you kind of draw um, a sense or a graph of how typically the savings change, at different life stages. And this is what we want to kind of show here, is when you are single or when you are with a partner, let's say when the household is up to two people, yeah, this is the time where you have the maximum saving capacity, generally speaking. Yeah. And of course, once you have kids, and of course they come with a lot of expenses. I have two kids myself. I am in this range. I'm not a young family, so I am 46 years old. I have two kids, 12 and almost 16. Yeah, so I am in that high cost kind of life stage at this point of time. So my savings on a monthly basis, if I get 20%, 25%, I'm really happy. Yeah. So you need to be kind of aware of this cycle that one goes through. And the more we emphasize with younger people is, this whole thing of the earlier you start saving, the earlier you start investing, it is better. And it is not only from this financial perspective of, your returns get multiplied, of course, but also from a very practical life situation perspective. Yeah. So it is super important that the earlier you start, the better it is. Now, saving is one question, but just saving is not enough, right? What do you do with that saving is important. So, what we first always ensure with our clients is whenever they start saving some money, like I also work with some clients who've just started working, right? Who have been in a job only for 6 months and now they are just starting to save some money. What do you do? The first thing what we tell all of such young clients is to at least first create a safety reserve. What is a safety reserve? A safety reserve is basically that you should have at least 4 to 6 months worth of your monthly expenses set aside. So if your monthly expenses are 2,000 euros a month, that means that you should have at least 10,000 or 12,000 in ideal situation kept aside as your emergency fund. That if something goes wrong, at least without any income coming in, I can survive for 6 months. Yeah. So that's the whole idea. And the bigger the unit is, in the sense, the more the number of people there are in the unit and the number of dependents that they are in the unit. Like if it's a family structure, then this creation of emergency reserve becomes even more important. And then in some cases, we also build up to 1 year of emergency savings. I mean, what if the two parents lose their job? Yeah. Then the question is, okay, what do you do with this emergency fund? You can't just keep it in your bank account where you're not receiving any interest rate. Yeah. So the goal is always to have this emergency fund also earn at least a return equal to the rate of inflation. Yeah, which is, let's say, approximately 2 to 3%. So even this emergency fund needs to be invested in a safe investment where it is earning at least 2 to 3%. And one practical tip I can give you guys is that at least how we manage the emergency funds of our clients is that we use money market funds. So money market funds are the ones which which is a debt fund, right? And it gives you approximately 2 to 3% a year. It is fully liquid. You could take out your money at any point of time, and usually there are no fees attached to these funds. Yeah, so that's one tip you can use if you want to kind of invest this in your situation. And there's a QR code here. If you want to scan, or you could message me later. We also have a financial budgeting template that we use for our clients. This you can use to kind of document your own income and your expenses, and it gives you an idea of your savings and shows kind of a breakdown of where you are spending more money than what is kind of an average expected. And you can also list your assets and liabilities and also your financial goals. So you can scan this or you can message me later. But let's move on. Now we've talked about the cost and the savings perspective. So the next topic we're going to jump in is German Social Security. Yeah. By the way, just to guys let you know, we will take a lot of questions in the last 10 or 15 minutes. So I'm just kind of going through all the topics. But please be rest assured that you will have your time to ask any questions once we are done. Okay. German Social Security. This is, I think, super important for everyone to understand. And this is usually a black box for most of the expats once they come in. And especially if you are starting to learn the language, you do not understand your salary slip, right? I have some clients who've been living here for 3 years, 4 years, and they say, I don't understand a word of my salary slip. So can you please explain this to me? Yeah. So what we are trying to do here is first understand that the total contributions that we are doing to Social Security, what are the different components to it? So you understand that on a monthly basis, what you are contributing to and what benefits you can expect out of it. But let's start with the question, okay, who is supposed to contribute to Social Security? Now, anybody who's employed in Germany is by law required to compulsorily contribute to the German Social Security so they can take the benefits. And even the trainees or the startups, how they call here in German, Azubis, right? So even when you do not have a fixed job or a full-time job, even when you're working as a trainee or something, you are supposed to contribute to Social Security. Now, people who are self-employed, right, or business owners, like for example, I have my own business. Now, by law, I am not required to contribute. Now, given how the situation of all of these things are kind of developing, is that they say that they might in the future also make it compulsory for non-employed people to start contributing to the Social Security service. But at this point of time, I do not, let's say, for example, contribute to any of these public systems. Now let's see what all are there. So they say there are 5 pillars of the German Social Security. Krankenversicherung is health insurance, Pflegeversicherung, long-term care insurance. But both of these can be kind of clubbed together and viewed as health insurance, right? Rentenversicherung, this is the pension system. Arbeitslosenversicherung. This is the unemployment security. Unfallversicherung, accidental insurance. Most of the people know the first 4 and they don't know the 5th one. And there is an interesting reason why even some people living here for 10 years don't know that they have an accidental insurance that provided to them. Now, what is all of this, right? Kranken- and Pflegeversicherung, what you are doing is you are contributing into this public health insurance companies, right? And you are required to do this on a monthly basis. So you get a certain standard of healthcare or rather certain standard level of access to healthcare treatments in Germany, which is the same for everyone who comes under public health insurance. Yeah. Now the contributions for Krankenversicherung and Pflegeversicherung, they are always linked to your gross salary. And the same is true for Rentenversicherung and Arbeitslosenversicherung as well. Yeah, they are a certain percentage of your gross salary. And that percentage is then split into 2 parts. Half is what you contribute and half is what your employer contributes. Yeah. Now let's talk about pension. So pension, very simple. You contribute again something on a monthly basis, so you get access to the German pension when you retire. Okay. Now at this point of time, the standard age of retirement is 67. However, you can start your pension earliest at the age of 62. Same, the contributions that you make, and I will tell you how much you're contributing out of your gross salary in a bit. But again, the total contributions are split into 2 parts. Half you contribute, half your employer contributes. Yeah. And the last one is unemployment insurance. This is if you were to lose your job at a certain point of time, you have to go and you have to register yourself with, let's say, the Arbeitsamt, and they will start giving you a certain monthly income. And that monthly income that they give as an unemployment benefit is linked to your gross salary. So it is a certain percentage of your gross salary, and there is also a cap to it. Now, in certain cases, I think the highest that you can expect to receive from Arbeitslos is 3,000 euros. Yeah, so that's the cap. Now, the last one, Unfallversicherung. Unfallversicherung is basically accident. Now, this is the only insurance out of these five kind of insurances where you do not make any contributions, but only your employer contributes. And that is why a lot of the people, they do not know that they have this coverage. However, it is a very specific partial coverage. What it says is that if you meet an accident in the place of work where you are employed, or on the way to work or back home. So the transit as well. If something happens to you as a result of an accident, then this accidental insurance will pay you a certain lump sum based on the severity of the accident, whether you have a physical problem or you have developed a mental issue as well as a result of an accident. And so the coverage is only related to your work and your transit to and fro, from home to work. And these are then the five insurances. Now, let's see how much are you total contributions, right? So the total contributions are the double of this. So 7.3% is what you are contributing, right? Based on your gross salary. And here the gross salary is also capped. Now, it does not mean that, let's say, for example, if you are earning 200,000 euros, that, you will pay 7.3% of this 200,000 euros. So the gross salaries also have different caps. Yeah. For health insurance, I think it's approximately 80,000, which is the cap. For pension, it is 96,000, which is the cap. And for unemployment, I think it's also the same one. So basically, the thing is that the more you earn, the more you contribute, but also there is a certain limit. So let's say somebody who earns 96,000 euros a year will pay the same contribution to, let's say, Rentenversicherung as what the one earning 300,000 or 400,000. So that's how the capping works. Now, if you were to add all of this, approximately 20 to 22% of your gross income is simply contributed towards the social security, yeah, on a monthly basis. Now, this is how it typically shows in your salary slip. KV stands for Krankenversicherung, right? Now, yeah, this is an example of a salary slip where, let's say, the gross income is 5,400, yeah. PV is the Pflegeversicherung, the second component. Then comes the RV is the Rentenversicherung, right? And the last one, this is the Arbeitslos. Sorry, I just clicked on it. Yeah, AV is the Arbeitslosenversicherung. So this is how all the deductions are made. Then your taxes are done. And then this is your netto. Now, all of these contributions, they happen before taxes. It means they're all tax deductible expenses. So at least you're not taxed on the part that here what you are contributing. So that's about the how it kind of reflects in your salary slip. Now, important thing to note, right? How these things are changing in the future. Krankenversicherung is becoming more and more expensive, while the benefits that you are receiving are shrinking down. Yeah. I have a very interesting slide. It's not a part of this deck, but which shows how the benefits of Deutsche Krankenversicherung have decreased over a period of time. There used to be a time 15 years back when all your dental treatments were also covered by public health insurance. Now they're no longer there, right? Only the basic ones, the cleaning and all that stuff, and those ugly fillings which they might do are included. But if you want anything better than that, then you have to pay out of your pocket, right? So that's how it is happening. And this year, in 2025, what they did was they put a surcharge on the health insurance. So the number that we talked about, 7.3%. Besides that, they also have additional surcharges, by which they can increase on a yearly basis. This year, that surcharge was the highest at 2.5%. Yeah. So this shows how much you are paying more every year towards public health insurance while the benefits are kind of going down. So it's not a great deal, to be very honest. The same is the situation with pension. We are paying more and more. And what you can expect to receive out of the pension system is lesser and lesser, right? The whole public pension, the fund that you say, right? It's actually in deficit in terms of trillions at this point of time, right? So there's a huge deficit in the public health insurance system, not health insurance, but pension system, because they have more people who need money out of this big pension pot and less people, probably, unfortunately, or fortunately not me, but most of the employed people who are putting into the system. So that's the situation of the health and the social security. Yeah, this we already talked about, 21% of the gross salary. Okay, now we are transitioning to the risks part, right? And here comes more practical tips, yeah, for people who are coming into Germany. So of course you start earning, but before even that happens, the first thing you do is you need to find an apartment. And also there is an issue, of course, with Germany. There is a huge demand and supply gap of residential properties in Germany, right? So getting a good apartment or the one which fits your budget is super difficult. And then even once you get an apartment, the first kind of financial hurdle to cross is the deposit that you have to make. Yeah, this is usually 3 months worth of your rentals, which you have to put as a deposit. Now, what we also work with, when you're working with clients, one important thing is to kind of reduce as much as lump sum expenses that you have to make. So what we also recommend to a lot of our clients who are either, looking for an apartment or who are even shifting apartments is something called a Mietkautionversicherung. What it means is that instead of giving that big lump sum to your landlord and not make any money out of that, 5,000, 6,000, whatever, which you could have invested and made some money. So there's an option called Mietkautionversicherung. How does this work, right? You go to so there's an insurance company that comes here into the whole picture, right? So what you do is you go to this insurance company and this insurance company says, okay, if let's say your deposit is supposed to be 6,000 euros, yeah, I am going to give a guarantee to your landlord that if something happens, right, by the time you are leaving or during your stay where that deposit has to be used, the insurance company will take care of those expenses. Yeah. So first of all, what you're doing is you're transferring the risk from you to the insurance company. That's anyways the whole premise of insurance, right? And you do not have to make any lump sum payments to your landlord. What you need to do is you have to pay an annual insurance cost. Of course, there's an insurance premium. It is not a monthly premium, but it works out to be very cheap. Like, for example, for the 6,000 worth of rental, I think the deposit which you might have to pay on a yearly basis is approximately 120 euros. So let's say over a period of 3 years, it's 360, right? Which is approximately, let's say, 6% of your total amount. And you can make much better return on investing the 6,000 euros into even the safest of funds, right? So what you're doing is the returns that you are making by saving this cash investment is much, much more than the small fee of taking this thing, right? So that's the first thing. Your cash is not locked in. You can invest and get better returns. And also it is easy to manage from a tenant perspective, right? So how it usually happens is if your landlord has to file any claims, right, it will not come to you. Of course, it'll explain, okay, this is what I am claiming for. Let's say there's mold growing and I have to get this mold removed and it's going to take me 500 euros. So I'm going to take it out of your deposit. But the landlord has to deal with the insurance company. Yeah. So how it helps is, number one, it takes your headache away. You don't have to deal with them. The insurance company will verify whether the claims are valid or not. And if they are not valid, so they will say, no, my client, which is you are not liable to pay for this, right? So it kind of also gives you a safety against some unreasonable German landlords, right, who might want to kind of fleece you, and I'm being very transparent. I've come up this situation across many times where, especially the non-German tenants, they have a lot of trouble dealing with these things because they do not know whether this is actually my problem or it is landlord's problem. So the insurance company basically deals with all of these things on your behalf. And if it is a valid claim, then the insurance company will, of course, pay them. And at the end of this insurance term, you have to pay the insurance company back that money. So that is for sure that you have to pay that money back. But at least the whole process and in the whole term, you just have no worries, to be very honest. Yeah. So that's how Mietkautionsversicherung works. Let's look at the other important insurances. Now, if you guys are living in Germany, then you might have already, taken some of this. I hope that you have taken some of these. But from our perspective, as financial advisors, what do we think are the critical ones? So four of them are important. Liability insurance, of course, first and foremost, this is something which you should take with your eyes closed. House rat and glass, that's also important. Accidental, again, a more personal choice. Legal, super important. So if you were to ask me out of these four, which are the two most important ones, I would say liability and legal. Yeah. The other two stuff, yes, you kind of need them, but liability and legal are something which you should just not kind of think about. Yeah. So now let's talk about what these insurances are. Liability, it's like a third party liability insurance. Yeah. So it means that if because of your negligence or an accident or something, you damage a third person or a property of the third person, yeah, then you have an unlimited liability to pay for those financial damages, right? Unlimited meaning your all the current assets can be taken away, or even your future earnings can be taken away to make good this loss of this third party that you have injured. Yeah. And usually how in the most practical forms where this comes into use is your rental agreements. Yeah. Any rented goods or properties. So the apartment that you are probably living in is a bigger part of this liability insurance. And of course, usually these liability insurances, they have a global coverage, right? So you don't have to worry, okay, um, for example, you're on holiday in the States, or let's say in Hong Kong or somewhere in Asia, and if something happens there, let's say you're staying in a resort and because of your mistake something happens, yeah, you don't have to worry that whether this German liability insurance is going to cover that or not. They provide usually local global coverages, and typically very high coverages, so they are more than sufficient. Like at least the ones which we offer give 50 million euros worth coverages. So that's enough to kind of cover for everything. Second comes the household and class. Now, traditionally, it was a very conservative concept. That, like, for example, how you need to think about it is you have a house, right? If you were to turn this house upside down, then all the belongings which might get destroyed or damaged, so the household insurance would kind of reimburse for those kind of damages. Yeah. Now, this is the old version of household and class. With times, these insurances have also kind of developed. So in current day, everybody recognizes that, let's say my most valuable belonging is not the TV, is not the fridge, or, and nobody kind of keeps too much of jewelry or expensive things at home. So that's not where my important financial belongings are, but my belongings are more online. Yeah. So my online accounts where my money is lying, or my payment accounts like your PayPal, or the things like Klarna, which you might use on a regular basis. Now, these new kind of insurances also cover for any kind of, let's say, theft, online fraud, and all that stuff which happens on your online assets. So that's a super important thing, which is important for all of us. Just last week, I had a client who used a Klarna kind of a credit account, and there were some fraudulent expenses worth 800 euros charged on her Klarna account. Yeah. So what do you do in these cases? Of course, you go, the first thing is you file an FIR for an online fraud, you go to Klarna and all that stuff. But if those things do not kind of work, then this insurance will come and pay you back those 800 euros. We are still in the process of making sure that Klarna pays. If Klarna doesn't reverse these charges, then we will use this insurance that we have for our client. Third important coverage of this new kind of household and glass insurance is the belongings that you carry on yourself outside of the house. So let's say you at least have always your laptop and your smartphones and your wallets with you. So if somebody kind of snatches those things, or there's a robbery or there's a vandalism act, so that also insurance this kind of covers. So this insurance covers and reimburses for your financial damages related to your properties if there is a theft, robbery, online thing, most important. Second, if there are any natural causes, let's say fire, water, earthquakes, snowstorms, hailstorms, in those cases. Yeah. So that's how the household and glass is important. Third one is accidental. Now, you might wonder that, okay, if we are all covered under, or at least the employed people are covered under the Unfallversicherung, which is a part of the Social Security, then why do I need this? You need this because statistically, most of the accidents, yeah, unless of course you are a factory worker or you are working in a dangerous work environment, most of for most of us, the accident happens outside of the workplace, probably when you're traveling or you're doing a trek or something that you're doing outside of your working hours. And this is where you need this. And these private accidental insurances give you 24/7 coverage and globally. Yeah, so it fills that gap which is left by just the occupational accidental insurance. And the way it gives you the compensation is like, again, the lump sum. Yeah. So let's say um, if you are left with a significant physical disability as a result of an accident. So they can pay you like €500,000 or something. Yeah, so that's how accidental insurance works. And besides that, they also give special compensations for your health treatments related to an accident. Like, for example, dental treatments, rehab work, cosmetic surgeries. So some of these things which are not covered by your health insurance, like there is no health insurance, even the private one, which covers cosmetic surgeries in Germany, but accidental will cover. Yeah, so it kind of fills those certain gaps. Last but not the least, legal. Yeah, personally, if you ask me, this is the most important one. The goal of legal insurance in Germany is to defend your rights here, your legal rights. Now, the problem with a lot of expats is, first of all, they're not aware of their legal rights. Yeah, like who is in the right, who is in the wrong. And even if they are aware of it, they believe that, enforcing their legal rights are going to be super expensive and challenging. Yeah. So legal insurance is very important. Yeah. Because it provides you that comfort and also that financial backing that if something goes wrong, if you have to go to the court of law to defend what is rightfully yours, this insurance will take care of it and you don't have to worry about it. Yeah. So now there are four areas of life which are covered by legal insurance. First and foremost, the most important is your employment, your work contracts. Second is your private contracts. Yeah. Third is your house related contract, whether it's a rental contract, whether you are living in a house which is owned or it is rented. So any legal issue related to that is also covered. And fourth is your traffic. So if you are a part of an accident or an issue which results in a legal case, so that gets covered here. Now, usually legal insurances, they have a 3-month waiting period because they do not want those clients who come to them when they already have a legal problem. Yeah. So I would always advise it to take it when you do not have any problems, right? So then you can easily go through the 3-month waiting period. So if in the future something comes across, that gets covered. Yeah. So in legal insurance, earlier the better. And last point is, for every legal case that they have, you have to make a small self contributions. It could be 150 euros a legal case or 300 euros, but it is nothing as compared to what a whole legal case can cost you. It can cost you anywhere between 10,000 euros to 50,000. A normal case or a bigger one could also cost you in millions. But usually the legal insurances, they have unlimited coverage. Yeah, so you don't have to worry about that part. So this is about the crucial insurances. Um, One thing I want to touch upon quickly is the pension system, because we talked about how kind of broken the public pension system is. So I want to give you a quick idea on what else is available and how beneficial investing in some private pension plans can be. So this is the first part, right? So if you are an employee here, so you're mandatorily, contributing to the statutory pension fund. So that's the first layer of your pension preparation. Then comes three different options: Basisrente, company-sponsored pension plans, and the Privat pension, right? So that's how usually people kind of build their whole retirement planning on. First comes Basisrente. Now, Basisrente is super important from a perspective. Now, here there is a little bit of comparison between the famous US, terminologies like the IRA or the 401k. So there's a kind of an equivalent drawn here because both of these give you significant tax advantages. Yeah. So Basisrente is very similar to IRA, which basically means that you invest just the way you invest in, let's say, statutory pension. You do a monthly investments. You choose how your money is being invested. Remember, in statutory pension, your money is not invested anywhere, right? It's just sitting there, and the people who are currently in pension, they are being paid pension out of this investment, not investment, saving. In Basisrente, you choose your investment strategy. You can invest in equity, funds, debt, gold, even gold, real estate. You can invest anywhere you want. The catch here is that you cannot take the money out before you are 62 because it is purely meant as a retirement planning system. But the good thing is that 100% of the investments that you make here are tax deductible. Yeah. So especially for the higher earners or anybody who's earning, where their tax rate is at least 30%, it makes a lot of sense to start their whole investment kind of plan or a program with Basisrente. Yeah. Um, Now, what is then, there's a small example, but I'm going to skip it. What is this company's sponsored pension plan? In German, it's called Betriebsaltervorsorge. This is a pension plan in which your employer also contributes. Yeah. So you and your employer both contribute. Of course, the plan is better if your employer contributes significantly more. Now, by law, they are required to contribute at least 15% of the total monthly contributions. So if they are investing or if they are contributing 25%, 50%, that means amazing plans. Go for it, right? But the catch here is, again, you do not have control over the investment strategy. Yeah, because the companies kind of buy these pension plans from insurance companies and they are fixed for everyone. So you cannot control the investments, and the returns are usually lesser in these investments because there is a big guarantee component. And the investment strategies are also very conservative, to be very honest. Here, you have certain restrictions. If you take out money before 62, and also you have to pay for your social contributions on the money if you receive it at retirement. Now, they are also tax deductible, but the limit is slightly lesser. It's approximately 7,000 or 8,000 euros. But broadly, these are the two simple and the most kind of, from a tax perspective, investment pension plans that you should definitely kind of consider. Again, an example I will leave. But if you were to consider both of them, right? I will still reduce out of this 29,000 approximately 9,000 because that's the contribution that you're making to your public pension fund. But if you have both of these options, you can invest up till 28,000 euros per person in a single year and make it completely tax-free investment. So it's a huge kind of leverage on the returns that you can expect, yeah, once you retire. So that's some suggestions on um, pension. Last topic, which I'll quickly touch upon, is private health insurance, because we also mentioned as a part of the Social Security this health insurance question. So a lot of people also ask me, okay, so how is private health, compared to the public ones? Now, I would recommend thinking about, private health insurance considering these 6 points. Yeah. Number one, the main premise of considering private health insurance should be that you get access to better medical treatments and of course quicker appointments. Yeah. So this is, I think, is the starting point why you should consider private health insurance. Now in public, there is, I mean, think of it, there's like a menu of medical treatments. Yeah. Under public health insurance, you can use only 60% of the menu, while if you are under private, you can use 100% of the menu. So that's how kind of the restrictions are taken off if you were to switch to a private health insurance. You can choose different coverage levels. Now, public insurance, there's only one kind. It's the same for everyone. Private is different. Even within private, there are different levels of coverage which you can choose from. Yeah. So there is a lot more choice, which you can then figure out with regards to your personal, let's say, spending capacity. Saying that, okay, this coverage costs this much, so this works more in my budget as compared to, let's say, kind of the best or the highest level of private. Here, as I said, your premiums are completely related to the coverage level you choose. And also, what is most important is the eligibility criteria, right? So we will talk about in terms of gross income, but here your eligibility or what you pay for private health insurance is completely linked to your age and your health conditions. Yeah. So if you were to, let's say, decide that, okay, I want to try out public health insurance, you have to fill a health questionnaire, which you never have to fill once you have to go into public health insurance, because public health insurance, it doesn't care about whether you are a child or whether you are a 60-year-old person or whether you are a sick person or you're a healthy person. It doesn't matter. It's the same for everyone. But private health insurance, they will do a risk assessment based on how healthy you are, how old you are, what are your existing health problems, and then decide, number one, whether they will cover you, and number two, what will it cost for you to get the coverage that you want. Yeah. And then comes the income level criteria. So you can also shift to a private system only once you have a certain level of gross income, which is approximately 74,000 euros this year. Yeah. And then there are also some restrictions on switching back. So that's also something which you need to be really aware of, right? So everything has its pros and cons. So the cons is that the shift back to public health insurance is not an easy one. Can only happen easily if your income level also drops. Yeah, so that's normal. So if you're losing a job or something, then automatically your income drops, and then automatically you can switch back. That's easy. But if you just decide to switch back without any changes in your gross income levels, then there might be an issue there. Yeah. And last but not the least, these are all individual insurances, right? So there is no family coverage. Every person has to take a separate insurance, again, based on their own private health assessments. So that's about private. Last thing, how we help. Usually we do a 360-degree financial consulting. There is no cut and dry approach to any client. It's as per the client requirements. We facilitate everything. Just giving you an idea that, where all this kind of an understanding or experience comes from, because we work across all financial topics related to our clients. Like I mentioned, real estate financing, though we did not touch. And we do not charge any hourly or retainers free at the start of an engagement. We get paid later on once our client implements some strategies and if there are any financial products involved. So that's how we work. already mentioned this. Now I'm going to stop sharing my screen and I will be open to questions. I'm going to unmute um, all of you guys. So if you have any questions, you can please, let me just stop sharing my screen. I'm going to unmute all of you so you can ask any questions, or if you feel more comfortable writing them in the chat, that's also fine. In the meantime, I'm going to put my email ID here. So if you did not take the snapshot of the QR code, and if you want any of those resources that I mentioned, you can drop me an email. Also, if you need any advice on the money market funds that we talked about, right? Those are safe investments where you can make 2 to 3%. I would also give you names of those. Thank you for sharing this email ID, but it'll be nice if you can tell me the context. Priya, you can also unmute yourself and, we could just talk about whatever is comfortable.
Hello.
Yeah, Freya, we can hear you.
Oh, okay. Hello, Jasmine, for sharing. Um, I was thinking, I'm still not sure about what's good and better for long term for the public or private health insurance.
Mm-hmm.
Because actually yesterday my friend was telling me that in long term, because I think he said that uh when you get older and older, you will have to pay more for the private insurance, and
Okay.
then for the public insurance, it's probably still the same. So that in long term, he said that it's better with the public insurance. I don't know if it's if it's true because I'm new here. So
Yeah, it is true to some extent, for sure. So what happens is that when you are in retirement, right? So your public health insurance becomes quite cheap. Your private health insurance, also the premiums go down in retirement, but the level, they do not go down the same way as a public insurance does. But all of these things can be easily kind of foreseen, calculated, and this is kind of what we do is, let's say if somebody wants to switch. So first of all, of course, the most important thing is honestly is to first check your eligibility. Before you go into all of these details and all that stuff, the first thing is to check your eligibility. Once you say, okay, you are at least able to get in, then comes all of these questions. Now the interesting thing about private health insurance is that there are also ways and means of controlling this higher retirement stage costs. So that is also something which we have done for some of our clients. So the way it works is, let's say if you want to make your cost equivalent to a public health insurance cost at the age of, let's say, 67 or 62, then there are different mechanisms in which it can be done as well. Yeah. And that is also after you see that what is the expected cost at retirement. So all of that is very transparent. We give comparisons of, okay, if you were in public health insurance at 67, this is what it will cost. In private, this is what it will cost. Do you want to reduce your cost in private? If yes, then there are different ways in what you can do as well. So, to what you have heard from your friend is generally correct, but then there are different ways and means of managing that as well. Also, what you need to remember here is the premium of the private health insurance is still to a certain extent in your control. Yeah, because the health insurance company will not, blindly keep increasing the premiums every year. But unfortunately, in the public health insurance, that decision is with the German government, right? And if the German government, if the whole system has more deficits, then it will keep increasing the cost, like it has always kept increasing the costs. Yeah. And then the benefits are going down. And that's another thing in private health insurance. If you have taken a certain level of coverage, that coverage can never be taken away from you. So your benefits, what you pay for, will never reduce, or which is in your contract at the start. But in public health insurance, there's no guarantee of, how the things keep getting taken off from your coverage. So many things. It's a complex topic, Freya. It's a complex topic, and if you really want to kind of consider, then there is a kind of a bigger and deeper discussion, which you can have on all of these different points.
Oh, that's a really great point. Thank you, Jasmine. Because yeah, I think because they have different programs and schemes in for insurance, and probably also for pensions, for with the private companies, they probably also have like different schemes or programs that
Yeah.
more guarantee, and then at least it's not really like not you don't know what's gonna happen with the German government policy change. So yeah, that's a really
Exactly.
good point.
So, I mean, that's the whole kind of difference that you need to think with the pension system. And I'll answer, is it Josica or Yoshika? I will answer her question as well. So I think the main difference is when you're dealing with public systems, whether it is health insurance or whether it's pension, everything is related to the bigger economic situation of Germany. What the government decides has a direct impact on you. While when you do these private contracts, right, it's you and the company. Yeah, it's a private contract. If something is written in the
Yeah,
contract, that cannot change. That cannot change in the future, right? If they have
yeah,
given you a certain benefit, you will get that benefit. Nobody's going to take that away from you. Second is from a pension perspective, investments. In public pension, your money is not invested anywhere. There is no money actually in the pot. In private, it's like your own investment plan. You decide how you invest, you change your investment strategies over a period of time, and your pension is completely aligned to your investment portfolio, what the returns that you make. So there's a huge difference in which you need to think about these two kind of systems. And let me answer your question. So what happens with the money that goes into pension if you leave them? Yes, interesting. So if you have contributed um, to 5 years, right? Say less than 5 years, and then you are leaving Germany, you can take all your contributions from the German pension system in one go. Yeah, you can take out the money. I mean, your contributions, not, of course, the employer's contributions. But if you have paid for those 5 years, or at least those 5 years, and then you move out at any point of time in 10 years or 15 years, you are eligible to receive your pension. Yeah. And you could be anywhere. Okay, when I say anywhere, it means I think approximately 120 countries in the world. So they have a kind of an agreement with the German pension system that if you're living in, let's say, X country, yeah, and if there is an agreement that once you retire, you will receive your pension there as well. Yeah, but it is something which you have to kind of follow up with the Deutsche Rentenversicherung system, notify them of your change in address, and tell them where you want your money transferred. Yeah. So that is something which kind of the onus falls on you, but you have a legal right of receiving the pension equivalent to whatever you have invested. Yeah. That is also similarly the case with private pension. You could invest, and if you leave Germany, and that's a more flexible contract. That's a private contract between you and a company. You just tell the company, I'm moving to so and so country. Please transfer my pension in this account in this country. So it works easily in both of these systems. Yoshika, you had a follow-up question. You can also just unmute yourself if that's easier.
I think they are not unmuted, so I probably will say something. Sorry,
And
Oh, by the way, can you share the slide deck later? I sent my email address already.
uh, sorry, Yoshika, I just tried to do that again. Okay, so maybe then there's a problem at your end. Freya, Sorry, I do not share my material. This is
Oh,
this is
okay.
a proprietary material. Um, and it's if it goes, I mean, I do share it with my clients, of course, once they become my clients. But in these sessions, I really appreciate you joining the session. You can send me your questions. Yeah, if you have any specific questions, or if you say I want a snapshot of this particular slide, I can do that for sure. Just drop me a message, but I cannot share the whole deck because it just kind of might land into somebody else. And you know how plagiarism works these days.
Oh, yeah. Okay. Yeah, makes sense.
Yeah,
Totally
but
understand.
fully open to always answering your questions, a specific slide or anything. And there is a lot of content on my website. So there are, as I said, there is this cost of living tool, and I can send you this Excel file, the financial template that I can easily, if you want, I can send it to this email ID easily. And there are a lot of information on my website, so you could also read there as well.
Okay. Yeah, yeah, I would like to have that and have a look. Thank you.
Most welcome. Um, Yoshika, I'm sorry your mic is not working, but do you have a follow-up question? Or anybody else has a question? Okay. If that's all, then I will wish you a great Sunday ahead. Hope to see you guys again, or keep in touch, drop me a message. Um, and if you need any help, any questions, always welcome. Great. Then I wish you yes, Freya, you have a question?
Sorry, maybe it's only me who can unmute.
No, no, please go ahead.
No, just the last one. Can you just simply summarize? So I think for employees, it's required to contribute for, well, the statutory pension to the
Mhm.
government. Uh, you mentioned about like having a business or self-employed people. That's
Mhm.
not required.
No. So they do not fall under the compulsory contributions. Like, for example, I do my private pension planning, right? I do not contribute to the Deutsche Rentenversicherung. I'm not obliged to. Of course, I have to meet certain conditions that, I have so and so employees and I have a proper business running. So as long as I prove that, I do not contribute. And also for freelancers, right? So individuals who do freelancers, they are not obliged to, but they are highly, highly recommended to then at least start doing the Basisrente, so the private pension planning. So long story short, everybody has to do some kind of a planning. Private is always better because you have more control. You are earning some investments on some returns on your investments. Public, if you have to, you have to, you cannot escape, right? The same is with health insurance. So I do not contribute to the public health insurance. I have my private health insurance. But honestly, it was a long time back. Even when I was employed, it was out of choice that I have always been in the private system here, except probably for the first year or two. I've been living in Germany since the year 2008. Yeah, so it's been a long time, at least 15, 16, 17 years almost. Yeah. And I have seen how these things have developed over a period of time. And I'm personally quite confident of the choices that at least I have made in terms of health insurances and also pension. Pension, though, I was lucky that I didn't have to kind of contribute too much. So that's the thing. And I think you can get a lot of this information on the website as well as to, as a freelancer or as a self-employed person, what are the conditions that you have to meet so that you do not have to contribute to the public system.
Okay, danke.
Most welcome. Great. Then, if no other question, then we can close. But you're always welcome to drop. I think somebody had asked for my web email ID once again, so I'm just typing it here. Okay, great. Then I wish you guys a great Sunday and have a nice weekend, the remaining of the weekend, and a great week ahead. And hope to see you guys again. Bye. Take care.